Hey everybody, Josh Sigurdson, World Alternative Media, and of course we're joined by author and economic analyst, here I am, John Sneisen, and you'd think that Michigan would have learned its lesson from 2007, the housing crisis, but maybe the people in Michigan have to some extent, but I don't think the banks have, because we are seeing very similar, really destructive implementations by the banking system. And one example is this article from Zero Hedge that says, this Michigan bank just brought back the zero down mortgage. They'll even cover your closing costs. And as the article goes into, a small savings bank in Michigan, Flagstar Bank, has come up with a genius, innovative new mortgage product that they believe is going to be great for their investors and low-income housing buyers. The zero down mortgage. What's better, Flagstar is even offering to pay the closing costs of their low-income future mortgage debtors. Here's more from Housing Wire, it says. And then it goes into, under the program, Flagstar will gift the required 3% down payment to the borrower, plus up to $3,500 to be used for closing costs. According to the bank, there is no obligation for borrowers who qualify to repay the down payment gift. The program is available to only certain low to moderate income borrowers and borrowers in low to moderate income areas throughout Michigan. Borrowers would not have to repay the down payment or closing costs, but a 1099 form to report the income would be issued to the Internal Revenue Service by the bank. So the gift could be taxable depending on the borrower's financial picture. Flagstar said borrowers who might qualify for its new program typically would have an annual income in the range of $35,000 to $62,000. The sale price of the home, which must be in qualifying areas, would tend to be in the range of $80,000 to $175,000, and it kind of is a lot reminiscent of what we saw with the Lehman Brothers. Old habits die hard, and it seems like this is just another example of this repeating of insanity. John, what do you think of this story?
Well, I think they reached again the debt level, the debt ceiling, as we could call it the debt ceiling, because that's what it is. It's a ceiling where they have indebted the whole populace. There's nobody else left in debt, so they have to come up with solutions like this where they give people free
Solutions,
money. Yeah. In order to actually be able to make more money by issuing mortgages, because they make money, of course, on the mortgage itself when they create it. Through their fees and so on that they get paid out, the brokers. And then on top of that, you would get paid from the interest on those mortgages as well. Now, I would not be surprised if the interest is quite high on these mortgages, as of course they always are with low to medium income people. Yeah. What we're seeing here is another attempt on just keeping to blow this bubble further up. Not really, it's to make a whole bunch of money for the bank, but they want to keep their income going. So they have to get into these bad mortgages. Same with car loans, same with student loans. They have to keep on pushing the envelope into worse and worse borrowers, because they have to get money from somewhere in order to keep their Ponzi scheme going.
Yeah, it's funny because a few days ago I was interviewing Dr. Ron Paul, and he was kind of going into this as well. The insanity of just continuously going back to the student loans, we have these auto-backed securities, we have the collateralized debt obligations, mortgage-backed securities, credit default swaps. The fact is, as he said, it's kind of like being addicted to drugs. You need those drugs. You got to keep going back and doing more drugs. Well, you don't need it.
The problem is you need more and more and more and more to get that same high, right?
Yeah.
And that's what you see here. They need more and more and more debt in order to get the same result in the economy with the Fed and everybody. The more debt you shove into the economy, the more monetary heroin, as Peter Schiff and a whole bunch of other people calls it, the more monetary heroin you shove into the market, the less and less of a high the market would get, and you have to pump in higher, more toxic and dangerous heroin into the veins of the economy, and the economy just keeps on wanting a same high, but they got to keep on shoving in 10, 15, 30, 40 times more, and suddenly you're starting to hyperinflate the economy while you're having a deflationary state. So it's like those tectonic plates. You have the hyperinflation meeting the deflation on this side, and suddenly depending on which one is going on over or under, suddenly you get that big earthquake when you have so much buildup, which is all the debt, and then suddenly it just gives. It could be the deflation that gives, which will probably eventually happen. But then the guys at the central banks are willing to keep the economy going, so they're willing to buy whatever they can in the economy in order to keep it up. We saw that lately with some recent bond selling off in the States. And what happened, sure enough, I was watching Gregory Mannarino, shout out to Greg. He was showing exactly how they went in and bought up a whole bunch of assets. I think a lot of that money can come out of, as Rob Kirby and us have been talking about, through the exchange stabilization fund, as dark money that gets funneled through other entities that they pay off to do the dirty work, as you can call it, to keep on filling up the economy. I think that's a lot of stuff going on here that we are not aware of in the general public, but definitely these banks are just continuing to blow this bubble, and they got no gas left. They're just running on fumes looking at the types of deals.
Yeah, well, you mentioned the ESF, one of the biggest manipulators that no one's talking about. Definitely look into our report, or John's report rather, on the Exchange Stabilization Fund. Crazy stuff. Some of the first examples of bail-in regimes, etc., go back to the
nuts.
1990s with the ESF. Anyway, we'll go into that more in the future, but we just see this massive manipulation in the housing market. We see these bubbles expanding. No matter where you are really in the world, it's just more pumping and pumping and pumping. And eventually this can't sustain itself any longer. But John, how long do you think this can possibly sustain itself?
Well, it's every time we try to predict something, we see they come up with more crazy, like some kind of crazy druidic miracles with monetary manipulation that they come up, and who knows what they're doing there at the Fed, having and now that you have Janet Yellen, not to talk bad about women, but
stirring a cauldron,
a little cauldron where they try to throw some dollar bills, or maybe they add some SDR contracts in there, something like that, in order to try to see what they can come up with in the economy. It's all they're in uncharted territory. These guys have no clue what they're doing, and Ben Bernanke and others have said it. They don't know where they are. Like they're trying out things and they're not sure. All they're doing is they have to manipulate the economy. We went in that same exchange stabilization report. They actually say in the documents that they have to use the exchange stabilization fund to prop up the US dollar because it's a flawed system. And that's what we're seeing. All this debt, like when you have a centralization of debt in a certain piece of the economy, you just create this massive bubble. And at one point, there's going to be no more debt to infuse into that market. And that market is going to come down and tumble because of over debt accumulation.
Absolutely.
And the losers are going to get out because, they're going to lose because they are sitting on the interest, and suddenly people are running out of money. And those people that are worse off, of course, they will be the ones that are losers because they can't pay their interest and principal on the debt, because you constantly have to renew money. But when it stops, that money infusion, there's no more money left to pay that, so now suddenly people are going to run out of that money.
Yeah, absolutely. And people have to understand, as Robert Kiyosaki says, your house is not an asset. Don't buy the stuff that you're seeing on TV saying, oh, well, you can buy and fix up and sell for more. You have to understand the market. The fundamentals are, of course, off the table due to the level of manipulation. We don't know when exactly it's going to happen, but we know it's going to happen. Therefore, you need to be prepared for it, and being over-prepared is better than being under-prepared. And with that said, I mean, when it comes down to it, you need food, water, shelter, defense so you're not gathering things for the toughest guy on the block, gold, silver, assets, real, tangible assets, decentralized Bitcoin, cryptocurrencies, etc., as long as you do your own due diligence. But I mean, when it comes down to it, we are going to see a massive, massive crash, as we did before, but far bigger this time around. And we're seeing all these telltale signs. And when we see all these telltale signs, we see this history rhyme more than repeat, but more rhyme than anything. We have to start looking at, well, how has this affected things in the past? What does the market say? How is this how has this happened in the past? And what can we learn from that experience? And you have to implement that knowledge in order to keep yourself and your family safe, ensure your wealth, and make sure that you're not involved in this massive bubbled up system that's ready to blow at any moment. It's insane. And just look at what the banks are doing. The banks are usually the first examples of, signs that there's going to be a massive crash, just by watching them pretend everything's all right when they're massively manipulating things and desperately trying to hold this beach ball underwater. But they can't do it at one point in time. It becomes too unsustainable and it bounces out, or that bubble pops. So that's, I think, really what we need to mention in this report. I think we've gone into this so many times before. There's a lot of other reports that you can look into that we've done on this subject. John, final word?
Yeah, the bottom line here is that you got to understand the way debt works with an interest charged to it. It works fine if you have the economy working well, you invest in really good, solid things that could create more growth in the economy. But when you do it into real estate and unsustainable assets, I call it unbacked assets. Real estate is really that, and unless you know really what you're doing, you are investing in something that will lose value, and you can't gain more value to the economy by just buying a house. So that's where the problem is. You have all this unbacked debt getting into one side of the economy where it's all unbacked debt, and then it becomes so unsustainable because there's no value creation or growth in the economy. So what happens is it quickly will collapse in on itself because it's not sustainable when you charge interest into that side of the economy. It's a little bit tricky to understand that, but if you take a look at a video, we did a video on user. It's super old video, but I actually talked about
that was
unbacked debt
2015
and
or
debt,
something.
back debt, and you also got to be wary when you have an interest-based system. It could always, end up collapsing in on itself with unsustainable amounts of debt.
Yeah, actually the basics are a lot simpler than they look. You just have to study it a bit and realize that it's made complicated on purpose to kind of shoo you away from actually learning about these things, so you're able to protect yourself and your family and get outside of that monetary manipulation, that market manipulation, and actually ensure your wealth and don't get into debt. And as I always say, they want to shove you down that bottomless pit of debt and force you to ask for a ladder up from the government and the banking system, which puts you in perfect servitude. So just break free from that and speak for yourself, understand these things, grow your knowledge, and then you will be able to change things without having to depend apathetically on a government or banking system, which doesn't have your best interest in mind to do these things for you. Yeah, absolutely. So thanks for watching, everyone, and until next time, this is Josh Sigurdson and John Sneisen signing out from World Alternative Media. Find the truth,
Be the change.
Thanks for watching, everyone. Check the links below. GoFundMe, Patreon. We can't do it without you. Any donation is very much appreciated, especially as we are so vastly demonetized by the Anti-Defamation League on YouTube, as they flag all of our content as hate speech. You can also find our Bitcoin address in the description in the comments, as well as on the screen for you to scan if you please. You can also find me at Josh Sigurdson at steemit.com. That's steemit.com, the future of social media, as the dinosaur social media digs its own grave. You get paid in cryptocurrency, Steem that is, on steemit.com via the upvote of your posts. So I hope to see you there. But until next time, this is Josh Sigurdson signing out from World Alternative Media. Find the truth, be the change.